Hey there, traders. David Floyd here with Aspen Trading Group. It is Friday, December 20th, and I wanted to do another quick video update for you and share with you a trade that we've had ongoing in our stocks, futures, and options service for the last couple of weeks. And that's Salesforce.com, ticker symbol CRM. And wanted to share with you not only the rationale for getting into the trade, but more importantly, how we manage the trade as of today in terms of not only adjusting the stop loss higher to protect our profits, but deciding to take a portion of that trade off. Sometimes I think trade management can be a very challenging aspect, knowing when to pull money off the table versus not pulling money off the table. And I think today's example highlights one of those instances where it's a good idea to pull some money off the table, and I'm going to share with you in just a moment as to why I believe that the case. Right now, though, I'm just going to minimize my my face on the screen here, put myself into the lower portion of it so that you can see the chart. And there we are, CRM, 2-day chart here. Genesis of the trade was pretty simple, tracking the move going back to September of 2018, so a long time ago. We've been tracking this long-term triangle, or what you might call a wedge or a pennant formation, depending on what you use in terms of your technical analysis approach. But we focus heavily on Elliott wave, so we call this a triangle. And we got really interested when prices bottomed out in late October, because it met the minimum definition of us for a completed triangle. Then we had this big 5-wave move higher, and that really got us interested, because not only did it take out the wave D high, but it retested, didn't quite take out the wave B high, but a 5-wave move after a corrective pattern is usually indicative that that thrust higher will continue going forward. So what our interest was at that point in time is, okay, we've got that 5-wave thrust higher off the October lows. Let's let prices correct lower. They in fact did, 50% retracement. Normally wave 2s are going to retrace about 50 to 61.8% on average. It did that, and then we started to get yet another impulsive move higher. So I'm going to drop this down to a 4-hour chart so I can just provide a little bit more of a granular look here. Here's that, let me change that here. Here's that 5-wave move higher. Here's the correction lower. And then we started to get this type of price action. We got long at 158.86, and we've been long. And as of today, I said, you know, it's time for us to not only adjust the stop losses higher, but to take some profits. And here's the rationale, pretty straightforward. It looks as though we're at the end of a minor degree 5-wave move higher off of that wave 2 low. What indicates that to me is two things. Obviously, the wave count itself. I can count 5 waves, or 5 waves nearly complete. But this for me was the kicker. This is a composite index that I look at, and you'll notice that as prices made new highs, the composite index did not. That's a very classic 5th wave trait, waning momentum as prices make a new high within that 5-wave cycle. So I'm looking at this saying, okay, we've got a little over 5 points of profit in here. Odds are increasing that we are likely to get a modest correction lower. Why not take a little bit of money off the table? And if prices do in fact pull back, which I suspect they will, we can always add it back in. It never hurts to ring the register if you do it for the right reasons. We're coming into year end. It makes sense to book some profits based on the wave count and the momentum. So pretty straightforward. We book the profits and we move on. Pretty straightforward. Couple other things I wanted to share with you at this point. As you know, here at Aspen Trading, we are very particular about our level of transparency. All the trades we place in our paid for services are always logged and always made public after the fact, and of course users are made aware of everything that's happening in real time. We think it's really important in this day and age. There's so many services out there that claim this, claim that, but you can't find their track record, or they don't manage money. Well, we do both of that, or both of those things. In 2020, we're going to be taking it up a notch. We're going to enhance the level of our performance in terms of how it's displayed so that you can track it. And we're also going to be launching a new money management company. I'm setting up a new company up in Canada, and we're going to be rolling that out based on the research that we do here at Aspen Trading. So a lot of exciting things happening in 2020. I think the performance and the transparency that you're going to see on a week-to-week, month-to-month basis is really going to go a long way in terms of separating us from the pack. I think we do impeccable research relative to our competition out there. We take it a step further, or as we like to say around the holiday season, we got a lot of balls in terms of throwing our necks out on the line and then putting our performance out there, good, bad, or indifferent. Luckily, 2020 or 2019 has been a great year, but of course we have a few hiccups along the way, but we're going to be increasing that level of performance and transparency going into 2020. I want to wish you and your family a very joyous holiday season. It's been a great 2019 here at Aspen Trading, and I'm looking forward to 2020. Until next video, have a great one.